So the $1 million question this year is what's up with my stock? What's up with my money? What's up with my 401k? Why my stock's going down, right? So typically, I'm calling money people like asset managers and all of them, the hedge funds, all that stuff. They don't really know how to trade. All they know is to just buy stocks and hold them because eventually they're gonna go back up. People fail to realize that stocks don't always all stocks don't always just go back up. And the market can crash for years and years and years if things got bad enough. So the only way I look at this like this over the past year, I started doing this in April, right? So I started April of 2021. Over the past year, this is your returns, right? Before you consider inflation. Once you consider inflation, this is your returns. So this is what you did $100 a month into the S&P 500, basically into your 401k, which a lot of people probably are doing, or even more money than right now. You'd have put in 1,400 and it'd be worth less than 1,200. So people don't realize that it can get bad. So going back to the dot-com bubble, say you just started investing because a lot of people was making money. So 2000 come, you're like, oh man, I might start buying stocks too. You saw a 50% drawdown because it was a lot of sales signals right here. Um, of course, it kind of happens after the fact. So even if you do get in, I'm okay with taking a 2 to 5% haircut, not no 50% drawdown, because when I see a sell signal, I'm selling and I'm not buying again until I see another buy signal. Buy signals don't happen until you get down here. You see what I'm saying? So that's where we're at with it. Why would you want to buy something and it can drop 50%? It happened again, the Great Recession. If you bought in 2000, you didn't make money. You didn't make money. If you bought in September 2000, you didn't make money until mid 2013. And you sat there through two 50% drawdowns. So if you just bought and didn't buy again, even if you dollar cost average in, you buying for years before you see any type of return. You dollar cost average all the way down here, you probably at break even right up in here. Then 3 years later, here go another meltdown, and you like, you feel what I'm saying? So it took 10, 15 years before you really saw any momentum to the upside. So right now, what we dealing with, I hate to compare, but it is what it is. It's a market crash. The market is crashing. The Nasdaq is in a bear market. I don't think SPY is yet. Yeah, SPY is still a few percentage points away from technically being in a bear market, but you got sell signals all over the place. Why would you sit and hold something if you're not making money? You could have gotten the first sell signal started coming. This would have been tricky because you first off, I see this, and I posted about this a lot, but even I was in denial that stocks will actually fall that much. So the first thing you see is, boom, you break below this, you start to say, okay, I've been riding this up for a minute. First of all, you should have been selling some down here more than likely, but either way, you should have been selling as it went up. But that's besides the point. Let's just say you didn't. You get these sell signals, you have to start selling. You will get another buy signal. If it's going to go up, you will get another buy signal, and it won't be too late. So that's just, I kind of wanted to talk about the 401k because that's what's happening with it. And a lot of people don't realize that this can get a lot worse. We don't have any buy signals yet. And me personally, I'm looking at SPY, the 401k, your 401k, and I'm thinking that we're going to see another 10 to 12% drawdown before we see any real type of bounce. I don't even think that this is going to be the ultimate bottom. I say that prematurely, but I don't know. But what I do know is that we have a very high there's a very high probability that we're going to see another 10 to 12% drawdown. And then there's probably a 50-50 probability that this is not the bottom. So I just don't know yet. I need to see candles once we get here to see what the stock price does. And I talk about this all the time. This is what's been happening underneath for a long time, since 2021. But SPY was still going up in 2021 while this was just breaking down. This is, I don't want to say this is the market, but this will give you a true gauge of market sentiment better than SPY, really. Now, if this wasn't a self signal, I don't know what was, February 2021. I, at that point, did not think that we would be back here at pandemic prices this fast. So if you bought at the bottom of the pandemic, let's say you bought at the bottom of the pandemic, right now you're only up 30%, 35%. That's after this went up some 300 something, almost 400%. Imagine holding this and thinking, oh, this is going to go up more. This is a massive, massive sell signal. There was no doubt about that one. With SPY, you kind of start to see it in September. But even at that point, just because of what we knew the Fed was talking about, we wanted to be cautious. We already knew to be cautious and to be more into taking profits off the table and maybe letting running positions run, or maybe letting small equity positions run. This was not the time to be fully invested, as they all were saying on TV and stuff. See, that's the real problems, that the people on TV say this stuff. Oh, I'm fully invested. Oh, the market's gonna go here, but they don't know because they can't read charts. The charts tell you everything that you need to know, and once you learn how to read charts, you will be able to easily manage your 401k better. You will know that, okay, now is not the time to be dollar cost averaging. Um, Looking at this, you would say something like, once you see that massive sell off, you start to say, okay, this would have been one buy signal that failed. You would have lost. And you would have known that after let me zoom in on this. You would have known that was failing. You would have got in there. You would have known that was failing after what, 2%? Then you get another, and this one looks a lot better. This is they call it like a piercing type candle or something like that. It's like a piercing type candle. This is a strong signal. So you just play the break above that. You riding it out until, because you ride it out until whenever. Because even as you get up in here, you start to think, man, this might retrace all the way back. This, when you start up in here, is when you start taking some profit. But by then, and at this point too, we also listen to what the Fed is saying, but all that kind of stuff. So um, even there, you had like a 30% return. And if you like what the Fed is saying, then you kind of start to loosen up that stop and say, okay, I need to see bad, because stuff is not just going straight up. This is what we call corrective price activity, right? Corrective price action. Stocks have to pull back, but we experience right now is not corrective price action. It is a meltdown. It is bad. So after a move like this, you start to kind of say, let me gauge the market. Let me see what the market's saying. Let me see what the Fed talking about. Oh, they being more accommodative. They not this, that, and the 30. The job market strengthening, the economy strengthening. You see all this stuff and say, okay, I do want to be in stocks. Let me leave my full position because I didn't got it at the bottom. But right now, that ain't it. You can't justify holding anything. I'm not the type to just hold stuff because this is what happens. And if you don't see this, then this is what you experience. You at a, basically, call it 6%, call it 15% loss, right? When we talk about inflation. So that's really, I hate dollar cost averaging, and it sucks because that's what I was taught works. Because when I first started investing, luckily, I didn't know nothing. I just knew buy stocks and they go up. Lo and behold, it worked because we, at the time, luckily, we had the most accommodative Fed like ever. So this is why stocks just skyrocketed the way they did, and during the pandemic. But now we have a very aggressive Fed Don't know if it's the most aggressive we've had, but it's up there in the rankings because they got to fight inflation. They have no choice. And so that's kind of what my mindset is. Uh, yeah, and really just, I would say, take care of your money, manage it, and don't get too caught up in dollar cost averaging because imagine if you dollar cost averaged into this. This is what a lot of stocks look like. This is Facebook. These are the stocks that are inside of SPY, not ARC necessarily, but your Facebook, your Netflix. Do you want to be buying that? Google's still holding up okay. Apple's still holding up okay, right? I made a previous video about this, but what do you think this is going? What do you think about happening to this? So, like, wait for that buy signal. Get out on the sell signal. Get in on the buy signal. It's really that simple. And these signals come every few weeks, every couple months. uh, so here was the first buy signal after the pandemic. You would have held for 1, 2, 3, 4, at least 5 months before you even had any instance of worrying. But even here, we would have been saying, this is probably just corrective price action. I probably would have had my stop honestly somewhere down there at that point because I rolled it up so much. It's showing me strength. And so you enter there and just ride it up. And you would have never had a real reason to sell until September 2021. That's just the market. So definitely join the mentorship. And this is all the kind of stuff that I teach. And that's it. Really that simple. Just don't waste your time dollar cost averaging into something that can turn into pure dog shit. Because that's what a lot of stuff can do. Inflation is good for stocks. Excessive inflation is not good for stocks. It's not good for anything, anybody. We have excessive inflation. And we get another inflation reading, like, what, Tuesday, I think, CPI? It's this week coming up. So it was at 8.5% year over year last reading. We'll see what is that this time. And a lot of people call them the top for inflation, but they call it the top like every month last year. So we'll see what happens. Know what's going to happen. I just know the signals that I see in the markets, and I just follow them. I respect them. That's how you manage your money. That's how you minimize your risk and you maximize your gains. That's my motto. Minimize risk, maximize gains, and never never lose control of your trade. So that's my thing. You go to 6FatDaddy9 on Instagram, find the link for my mentorship, and join it if you want to. So I'll catch y'all for the next video.